Normally as a Bitcoiner, when you hear about Tesla buying Bitcoin, you're like, that's a super cool thing. I
Yeah.
love this. Elon Musk is getting behind Bitcoin. Tesla is holding Bitcoin. That's a super cool thing. When I heard about this, it's like I think Do Kwon came out and said he's going to buy 10 billion of Bitcoin or something.
Yeah.
And I couldn't jump on it, and I didn't understand it. But at the same time, I was everything I read about it and what Pomp explained to me, I was like, this sounds super risky. When I see MicroStrategy buy Bitcoin, I'm like, they're probably not going to sell that for a very long time if they ever will. With this, I was like, is this just going to add even more volatility in?
Sure.
I didn't expect I wasn't predicting the extremity of what happened, but
a lot of people were bullish on it because they were converting Luna into hard collateral.
yeah.
So before you got UST on one side and you've got Luna, which is, remember, kind of equity in the network on the other. And there's this immediately accessible death spiral. And they were like, man, that didn't go well in February. We need some hard collateral. So let's swap some Luna for Bitcoin. And it's not going to be fully collateralized because there's not enough liquidity in the world to support selling all of Luna's market cap into backing UST, but let's sell 3 billion of it. Let's make UST 20% collateralized by Bitcoin. There are a couple of things that seem a little fishy about this, right? One is it kind of reeks of like an exit. You're selling your equity. You're selling the equity in the network for hard collateral.
Well, that's why I compared it to Block 1.
I'm actually not familiar with Block 1.
That was EOS, where they ran the year-long ICO and ended up accumulating 120,000 Bitcoin or something or other. That's why it just kind of smelled a bit similar. They found a way of printing Bitcoin.
Take a thing whose value is uncertain and trade it for a thing whose value is more certain.
Yeah.
Okay, but there's also a good stability reason to hold hard collateral, which is it helps give a different escape path from UST. Before the Bitcoin thing, the only way to escape from UST was to redeem it for Luna, which initiates the death spiral, like we talked about. But once you have Bitcoin in the system, then you can redeem UST for Bitcoin. And that doesn't initiate the death spiral. So it kind of gives you this 20% cushion where if 20% of people are redeeming, they'll get Bitcoin instead of Luna, and Luna's price can kind of remain high.
Was that an optional thing, or if you redeemed $1 of UST, you got 20 cents of Bitcoin and 80 cents of Luna? Is that what actually would happen?
It's not actually what happened. In reality, it was the Luna Foundation Guard's discretion to convert Bitcoin, to use their Bitcoin reserves to prop up the UST price.
Right, okay.
And so rather than UST price being propped up by Luna, they could dump a bunch of Bitcoin onto the open market and keep the price of UST high and close to the peg. Okay, now maybe the outcome here is obvious, but once UST depegged, they had to sell all their Bitcoin, to your point.
And it still failed.
Well, a couple of things happened. Number one, it tanked the price of Bitcoin.
Yep.
So it wasn't good for Bitcoin holders.
And also, their average sell price was way below that. Weren't they buying over 40,000 at one point?
Yes.
Yeah.
Yes. So the market actually had anticipated once UST depegged this failure mode, and the Bitcoin markets were already plummeting in advance of Luna's sell pressure because they saw that Luna had all this Bitcoin reserve that they had to use to prop up the UST price. So ultimately, they burned through all their Bitcoin reserves. The amount of demand wanting to get out of the system was too great even for the amount of Bitcoin reserve. And the problem with having a volatile collateral is, well, kind of obvious. When you sell the volatile collateral to cover your outstanding debts, the value of the collateral is dropping as you're selling it.
See, one of the things I thought is it was so obvious it was failing. Why didn't they just hold on to their Bitcoin and let it fail? At least there would be a pot of a valuable asset that they could either redistribute it to investors. Maybe they didn't expect it to fail so badly, but maybe people would have got 20% back rather than close to zero.
I think it's very hard to know. They had this last minute Hail Mary where there's a universe in which they could have saved themselves. They kind of distributed the Bitcoin to some of their investors who are market makers. as a loan. And so they didn't technically sell it. They just collateralized their own Bitcoin
Oh,
again
okay.
to their market makers. So they lent the money back out to market makers. And there was a universe in which if the peg had held, they could have repaid their Bitcoin loans at a lower basis, and
Okay.
they could have made out okay. And I also think there was just faith. UST had survived crazy amounts of attacks like this historically, and I think everyone in the system had faith that it was robust and that it was going to hold. And here's the thing with these kind of like long tail failure modes: it's not over till it's over. It doesn't fail until it fails, and so they had survived 8 depegging events or something like that previously, and they just thought this time wasn't any different.
Yeah, one of the other things that really stands out for me with this is that they're essentially trying to find product market fit, but with a product or a network that's worth tens of billions.
Yes.
Really, usually when you're building tech products, your
Yes.
product market fit is usually done with you test with an audience of, depending on the product, maybe hundreds, maybe thousands, and then you scale up. But with these products, you're essentially, because it's just a free open market,
Yeah.
and anyone can get involved, these can scale up to tens of billions in value.
I think you're pointing out something pretty interesting here, which is, the larger these stable coins are, right, the more adoption there is and the more stable they're likely to be. But then the worse and more contagious the effect is if it fails. It's almost like you have to be really big in order for it to be stable.
Yeah.
But once you get that big, the cost of failure is immense.
There's also this kind of industry-wide reputational issue that comes from it. We've seen attacks on crypto broadly, therefore that's an attack on Bitcoin because of this. The amount of calls or emails I fielded from people saying, "Oh, I heard Bitcoin's crashing," and
Right.
because of some stable coin. Like I was fielding questions for about a week from people saying, "Oh, it's all over," or
Right.
yada yada. Oh,
Right.
I heard people had conflated Luna with Bitcoin.
Yes.
And said Bitcoin has crashed. I heard loads of people. I had to field all these things, which is just fucking annoying. It's just annoying.
Well, you see the headline, right? Like, Luna 60 billion market cap goes to zero. And the layperson says, I knew it. Crypto's a scam, right?
Yeah.
It reinforces that notion in their head. And is that good for us? There's this idea of the lemon problem, right? Where if you're unregulated or you don't self-police or you let these things happen, legitimate investors are going to be like, there's a really high probability of me landing on a lemon. I'm going to invest in something and it's just going to be another Luna. And we don't want that, right? We want people to be able to distinguish good investments from bad. And we want legitimate, highly capitalized investors to look at the space with legitimacy. We don't want them to walk away or write off the entire space as, this ecosystem of scams. So, just to beat the drum again, I think we need to disclose risks. We need to be proactive about saying, hey, anyone who doesn't follow the standard disclosure maybe is hiding something. I don't know.
Well, yeah, but this is where it comes back to that thing where I think some of the large capital of investors are benefiting from this kind of crypto product structure. Like I say, with most VCs, traditionally they invest in a bunch of ideas and they get one or two winners out of whatever number of investments, and that kind of pays for itself. Now they've completely put the risk of their investments onto retail. Some would argue they do that anyway because most of things like Snap and whatever tend to drop in price, or Uber once they've hit market. Coinbase is similar, but anyway, the point being is that they get into IPO at seed stage. Multicoin made a huge amount of money on Solana.
Sure.
Huge amount of money on Solana.
Sure.
And arguably a lot of these things still don't have product market fit.
Sure.
And so they get the early stage investment. They get the expansion as it gets put out to retail. They're whatever you want to call it. They're pre-mine, their early, what do they call it? Their early investor tokens. They're whatever it is. But the risk is put onto everyone else. And the impact is catastrophic on some people's lives. I mean the Luna Reddit page that day after was like, I think about 5 of the top 8 posts were discussing suicide. It's like, what the fuck?
Again, the human toll is, totally incalculable to me. In addition to the lack of standard disclosure, there's also a lack of standard valuation. Like the reason why a 10K is so effective is because we have this like really standard way of describing traditional businesses. And there's like revenue, there's cost of goods, there's operating expenses, there's net income, there's taxes. Like we can read a standard income statement and roughly assess the quality of the business. Crypto tokens are incredibly idiosyncratic. Every single one is explained and designed with different incentives. So even if you do risk disclosure, I can't really apples to apples compare these different investments. It's actually extremely hard. And oftentimes, they're traded on really illiquid marketplaces. And so that's what a standard rug pull is, right? It's pulling the liquidity from a market and making it so there's no exit path. Standard markets are just too deep in terms of liquidity to allow for these types of schemes to happen. I'm not really sure how to fix that. I think in some ways it's one of the best opportunities ever for someone who's self-motivated and believes in autonomy and self-sovereignty. Because if you do your research, right, and you put in the work, there really is so much alpha to be gleaned by the differences between the different tokens. But to your point, if we're trying to get to mass adoption, is investing in liquid tokens like the right move for the layperson? Someone who can't invest 40 hours trying to understand the Luna failure mode. I'm not so sure about that. Maybe the tokens themselves are utilized and invested in by a subset of people, right? And the users get to use the underlying technology. This is this kind of like segregation of concerns. And again, I'm not calling for the SEC to come regulate the space, but it's something that, we should really think about, is how to protect investors and how to make us look like we're doing right by the people who support the networks.
They probably are going to come and regulate the space though, because these things look like securities.
I mean, they're already on top of it, right?
Yeah.
They're already on top of stuff like Uniswap, and they're already... The problem is the SEC is totally outmanned. We can't even keep up with the space. Insiders can't even keep up with the space. Like, I'm not sure how they can understand all the idiosyncrasies of every single token, but we can help. I'm not saying help regulators, but we can help retail investors.
I would also question how many success stories of which we actually had here. I mean, bear in mind, like, just to be clear, this is a Bitcoin show. I'm a Bitcoiner. I see Bitcoin now as a success story. I think it's here to stay. I think unless there is some coordinated global regulatory attempt to destroy it, Bitcoin's here to stay. I think, despite what some listeners might get angry about me saying this, I think Ethereum is arguably a success story on certain metrics, in that it has survived multiple cycles. Now, you might not think it can scale, you might not like what people use it for, but it has survived. I think there's something a little bit interesting in Monero. I've got Seth for Privacy coming on the show this week to talk about that, because I want to learn a bit more.
Yeah, I love him.
I'm not opposed to Monero. I've always been very clear about that. But outside of that, I don't think there's been that many things. If anything else, I can say that has been a success story. There's been a lot of failures. There's a lot of things that maybe have achieved some things technically that are interesting. So your measure of success is obviously subjective. But I would say, like, if we use things that have survived in terms of time or price appreciation, I think we've got we've got a handful of success stories in my world.
I think we need to think about the segregation between token value and network success.
Yeah,
right.
Fair.
Sometimes we conflate them. I think Ether is a successful token and Ethereum is a successful network. But there's something like Uniswap where it's not clear what the long-term value accrual mechanism of the Uniswap token is, right? There's maybe this fee switch that's going to get turned on and do revenue share. But Uniswap protocol is undeniably successful. It's the dominant liquidity venue for, ETH to stablecoins.
That's fair.
It's just done, I think at this point, trillions of dollars of volume, fully decentralized and permissionless.
But the volume of failure that we've had is huge.
For sure. And this is where Matt Levine, the Bloomberg writer, would say DeFi is learning in a couple of years what it took traditional finance thousands of years to learn. And these are all experiments, right? And we kind of have to learn by failure.
But that's where this disclosure becomes important, because I know everybody has their their own choice to make an investment or whatever. But some people are stupid, some are degens, and some people are just caught in the crossfire. Though they've been recommended by somebody. I mean, how many people probably turn around and said, "Oh, you should really take a look at Luna. This is great investment," because their friends did it, and they've not been exposed to the crypto scene. They don't know anything about it. And they've lost a bunch of money.
Right. I mean, what's the first question you get from somebody who's outside crypto about crypto? For me, it's always, should I buy Bitcoin right now?
Yeah.
It's not, tell me about consensus mechanisms.
Am I late?
Yeah. Am I late? Right. Am I going to make money doing this? It's never, hey, help me understand how DAI works.
Yeah.
Right. Hey, tell me about the newest BIP or EIP. And so I think it's our job as educators to get people smart about this stuff. Right. And if you're not, maybe take the Warren Buffett approach. Don't invest in something you don't understand.